direct from where we left. And I think we were computing the net present value per share, net present value per share. And if I can remember, we computed the number of shares, a fifth of the total shares that were available. Then we add whatever that we had in the company before. So we had 1 million. Then after computing a fifth of 1 million, we got 200,000. We got 200,000. So the number of shares, the total number of shares, total number of shares. I'm just doing a recap here. We had 1 million plus 1 million plus 1/5 of 1 million. So how much did we get for this? It gave us 1,200,000. It gave us 1,200,000. So having the 1,200,000, and we had later computed the net present value, and we computed the net present value, and we got a certain negative value. Someone to remind us that value so that we are able to compute the net present value per share. Remember, that is what we want. And already we had our formula of coming up with the net present value. So someone to remind us the net present value that we got. It was a negative value. It was a negative value. So we need to get net present value per share. Okay, someone to give us that value. Someone to give us that value. We had computed the value. It was a negative. It was a negative figure. That's the figure that we want. That's the figure that we want. Who is saving us? Who is saving us? Because I don't want us to go back computing that, and we had it. We had it. Okay. Okay. So sawa. 167, 3065. 167, 3065. Then you divide by 1,200,000. Divide by 1,200,000. I think that is the one giving you 1 point. Now that is the one giving us, let me see. I found someone wrote something here. 1.3942. You can maybe have it in 2 decimal places, 39, 1.39. This is now the net present value per share. Net present value per share. Net present value per share. So that is the net present value per share. And the question requires us to get the price of share after the right issue, but before they start selling. So whatever that we need here, class, we need to compute the price per share. And then I remember very well that I gave you a formula a formula for coming up with the price per share. The price per share. It's simple. It's simple. You just pick the share price, the market share price, and then you less the NPV per share. So that is very simple. So to get the price per share, so price per share as requested by the examiner, should be equal to share price, and the share price here, it is the MPS, the market price. How much was it? And then you have to add the NPV per share. This is simple for us because already we had our share price per share, share price or market price per share as 49.5, 49.5 plus, these are negative, so it's plus minus 1.39. So someone to give us our price per share, someone to give us our price per share, someone to give us our price per share, so that we move on. Price per share after right issue. That will be the price per share after right issue. After right issue. After right issue. How much? How much is it? How much is it? Ningapi. Okay, 48.18. 48.11. Sorry, 11. So that is our price per share. That is our price per share. As requested by the examiner, Roman number 1, done. Let's go to Roman number 2. So this one. Roman number 2. So for the Roman number 2, the examiner wants us to compute the theoretical ex-right price, theoretical ex-right price of the shares. The theoretical ex-right price of the shares. Theoretical ex-right price of the share. How do we compute this? For this one, you can look at the fourth sentence. This, you are told that to raise the amount, the company intends to issue a 1-for-5 right issue at the subscription price of 39 shilling per share. So they want to raise the amount, and therefore they have to do this. They have to do the right issue. To do the right issue. So in this case, what we have to appreciate is that one new share is going at how much? 39. One new share will be going at 39 per share. 39 shilling per share. So to compute this, just show you a very short way to get to the correct answer. So you say if one new share is going at 39, what about 5 old share? 5 old share nazo zinauzwa pesa ngapi? They are selling at the market price. They are selling at the market price. And what's the market price in this case? What's the market price in this case? What's the market price? What's the market price? So here we need the theoretical ex-right price of shares. Theoretical ex-right price. Ex-right price of shares. Examiner clearly telling us that one new share going at how much? Naenda na ngapi? Naenda na 39. So what's the total? What's the total? If one is going at 39, what will be the total of this one share? Total value, it will be 39. It will not change. Then 5 odd share, of course, shares at market price. The market price is 49.5. 49.5. So can you give me what will be the value of the 5 shares? What will be the value of 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 5 shares? Value of 5 shares itakuwa ngapi? 5 times 49.5. 5 times 49.5. 247.5. 247.5. Then, since we need to combine this and get the theoretical ex-right price, of shares. You have to get the total shares, and then you have the total value of these shares, So I'll be having 6 shares now, both old and new, and then you add the total, the total value, 39 plus 247.5. 39 plus 247.5. Utapata nini? 39 plus 247.5. 39 plus 247.5. How much are we getting? Mm-hmm. 39 plus 247.5. 286.5. 286.5. So with this class, you can get now the value of the price, the theoretical exercise price of this, So if 6 shares, the value is this, now we can get the value of 1 share, value per share. The value per share will be 286.5 divided by 6. Divide by 6. Itakuwa shilingi ngapi? Itakuwa shilingi ngapi? So anytime you find an examiner telling you one share for 5, 1 share for 5, get the theoretical. So you can see we have 47.75. 47.75. So as you can see, now the price has changed, or it has shifted from 49.5 to 47.75. It has lowered. So they sold at a premium. They sold at a lower price. The theoretical exercise price. Then we move to the third one. Let me see. That one was samaje. 39. That is the value of share. Can you get the value of right? Lost my question. Value of right iko ngapi? The theoretical value of right when the shares are selling at Camlight. So the number 3, Roman 3. Number 3, theoretical value of rights when the shares are selling at Camlight. Value of rights. Theoretical value of the rights. Value of the rights when the shares are selling Camlight. Selling Camlight. We said this before, Camlight. So the value will be the market price minus the theoretical exercise price, So this value of right, will be equal to the MPS minus the value, the theoretical exercise price. Theoretical price, exercise price. So we had 49.5 minus 47.75. Tapata shilingi ngapi? How much are you getting? Napata ngapi hapo? 1.75. 1.75. 1.75 shillings. Of course, that is shillings. So class, that is how you tackle such a question dealing with the theoretical. So I don't know whether it will be in order for us to do another illustration, or I give you as an assignment so that you'll be able to see the essence and understand. Will that be in order? I just give you one as an assignment. Is that okay? Is that okay? You attempt, then you can share something, whatever that you attempt in the group, and then I think for that one, I'll be in a position to look at it. Is that okay? I'll be in a position to give you the correct answer, but show that you have that interest. Okay, sawa. So just look at this. Look at this illustration that was done in November 2020. November 2020, question number 2, part A. So assignment, the weekend assignment. November 2020, question number 2A. Someone can send it right now. Someone can send it right now. There are those students who are very sharp. Assignments. Okay. Please feel free to attempt that. Give it a trial and see what you can get. See what you can get. Try internalizing the concept so that you are able to understand. This is a question that is examinable. And you can see the number of marks that the examiner is giving you. Examiner anakupatia marks mzuri. And then hiyo swali ukumbuke, we shall look at it. So make sure that you attempt, just give it your best, and it shall be well. So with that, I would like us to move direct to our new topic, financial analysis and forecasting. This is a new topic, financial analysis. So you can leave a space, maybe for one and a half page if you are using the A4, or 2 pages for practice, no problem. Financial. Forecasting. So when you will be doing your data analytic, when you get to advanced level, these concepts are being used very much. So you need to understand the concept. You need to understand the concept because it is important. So something small about the financial analysis and forecasting. You find that we have different types of financial statements. So those statements are analyzed, and we are analyzing to know the trend. We are analyzing to know the trend of the organization or the company in subject. That helps to build up the company or make a correction of a certain item. For instance, we find that we are using more of cost, the cost of sale. What can we do What can we do to reduce or to cut down the cost of sale? What can we do? Here we shall be seeing the exact percentage of that cost of sale. We shall be having different methods of computing this. Some like maybe vertical method, horizontal method, ratio analysis. And this will help us to see the performance of each and every, or the value of each and every item in the statement, both the balance sheet and the income statement, both the balance sheet and the income statement. So as a financial manager or as a financial analyst, you need to understand this concept of analyzing the financial statement. This is a topic that is repeated also in the financial reporting. I think we did that for the financial reporting. We did it. Now let's see how we tackle this under financial management. Under financial management. Remember, in the financial reporting, we wanted to know as we report, how is our report in the percentage wise? How is our report in the percentage wise? Now here we need to see, remember under financial management, we are dealing with decisions. How do we make decisions on a certain item in the income statement? How do we make decisions on a certain item in the balance sheet? So at the end of the topic, you shall be able to identify how you make decisions as far as the financial statement and forecasting is concerned. So we have some of the methods. We shall start with I'll just say this. A financial statement analysis. Financial statement analysis is the application of analytical tool tools and techniques to the general purpose of financial statement, to the general purpose of financial statement. The general purpose of financial statements, so as to derive estimates for business analysis. Estimates financial planning. What is financial planning? Who can tell us something small concerning the financial planning? Financial planning. Just say financial planning involves determining the amount of capital required, the amount of capital required in the coming financial period. Coming financial period. In the coming financial period. In the coming financial period. In the coming financial period. Our financial analysis and forecasting involve the following techniques. Horizontal analysis, also known as trend analysis. Horizontal analysis, also known as trend analysis. Horizontal analysis, a minute, also known as trend analysis. Give me a minute. Then we have vertical. This was well known as trend analysis. Number two, vertical analysis of common size. Common size analysis. Or ratio analysis. Ratio analysis. Ratio analysis. So let's start with the horizontal analysis. Horizontal analysis, and say it is a review of year-to-year basis. It is a review of year-to-year basis. To determine changes in specific account, changes in specific account, changes in specific account on year-to-year basis. It helps to determine the trend. So you compare maybe 2 or 3 years. It depends. You see what's the trend, what's the trend, what's the trend. So technique used here or method used is 1, year-to-year change. Year-to-year change. 2, trend analysis. So let's see year-to-year change. Year-to-year change. For year-to-year change, you say this compare financial statement. This compares financial statements. Compare financial statements. This compares financial statements over a relatively short period of time. Over a relatively short period of time. Short period of time. Over a relatively short period of time. EIA, 2 years. So then we have trade analysis, not writing down there. Trade analysis. Trade analysis. Trade analysis. Trade analysis. Trade analysis. So under trade analysis, this be trend analysis. So under trade analysis, you say it is useful in comparing financial statements. Financial statements. Covering more than 2 years. Covering more than 2 years. It involves choosing a base period. It involves choosing a base period. It involves choosing a base period, thus determining using the formula. So trend will be the current period divided by the base period, then you multiply by 100. Then you multiply by 100. Let's go to number 2. Also known as vertical. It's good to know both names. Vertical analysis. Vertical analysis. Vertical. So it is done To help understand how the company has utilized income and expenses. Income and expenses. Sorry. Income and expenses. Then a minute. Then assets and liabilities. Assets and liabilities. How they are budgeted and how they are budgeted. And how they are budgeted. It is used to understanding internal internal So this can mean that it can be used to compare different firms in the same industry. So it is important in intercompany comparison. Intercompany comparison, since financial statement of different company, of different company are always presented on a common size format. So are we through? 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 Thank you, Mr. Joshua, for highlighting that assignment. Thank you. Are you through? Are you through? Like, Okay, finish up. Want us to look at an illustration. So let me know once you're through. Hopefully now we are through. Okay, now we are done. Let's look at this illustration in November 2018, question number 4. So someone to share the question with us. Not even to share, but it's my hope that all of us have the question. I realize that some of us fear to speak. If you don't have the question, or if you don't know how to access the question, just you have to indicate for us. No, in a Zoom class, just if you contribute, we assume that you are okay. That is the aspect. Yeah, okay. So always communicate. Don't be left out. Don't be left out. And then later is that later you start saying, "Oh yes, oh motor, oh fire." That one will never solve anything. Will never solve anything. So just say if you don't have the question with you, so that we can organize, and then we elaborate where need be. So are we able to see this illustration? November 2018, question number 4. Are we there? Are we there? Remember, if you don't communicate, it will become hard. And if we get 2 or 3, we say that we are there. So let's learn to communicate effectively. Are we there? 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 November 2018, question number 4. Okay. See now, for instance, I can see Thomas already there. Thomas is already there. Maybe already there. So with that, we move on. So let's continue. Allow me to read the question, and then we see how to tackle this. So question 4, part A, the following are the financial statement for ABC Limited and XYZ Limited for the year ended 30th September 2018. We are given income statement for the year ended 30th September 2018, and then we are given the statement of financial position as at that date. We proceed to the question. We are required to come up with a vertical common size. They have used the both words. Common size statement of financial income. Statement of income for the year ended 30 September 2018. Then vertical common size statement of financial position as at the same date. As we said, from our financial reporting, we are following the same process. What do we use as the base figure under income statement? Under income statement, what will be our base figure? And I'm telling you that you expect also this one when you complete your advanced level, when you be doing your practical, the data analytic paper. The data analytic paper. This is a very important concept. They are testing it very much. They are testing it very much. So what will be our base figure? What will be our base figure? Because here we just need to know the base figure for either income statement and the balance sheet. The balance sheet for each company. We are dealing with the two companies here, company ABC, and then we have company XYZ. For this one, you only need to know the base figure, and you are done. You are done. Hakuna kitu ngumu hapa. It's nothing hard. What will be our base figure, class? What will be our base figure? What will be our base figure? The revenue. Yes, the revenue. For instance, for ABC company, revenue is 4,000, and the XYZ Limited, the revenue is 6,000. For any item from revenue going downward, we shall be dividing by the 4,000 for ABC Limited and 6,000 for XYZ Limited. Then you multiply by 100. Remember, we are looking at the percentages. We are trying to analyze this. So what I told you when tackling a question in the financial reporting, I told you that once you find such a question, you just have to copy the way it is. Copy for the examiner. When others are looking at the ceiling, for you have something to do. So part A, we are required to come up with that. So part A, vertical common size statement of income for the year ended 30th September 2018. So you can say this is ABC Limited, and XYZ Limited, vertical, the way they are calling it, common size, vertical common size, statement of income, for the year ended, 30th September 2018. Then you underline. Now, as you copy the question, what you need to have here, yes, as you copy the question, what you need to have here is the spaces, because you'll be required to have the percentage column for both company, So for me, I'll be having the percentage column, of which I'm not going to show the working here. Because my space is limited. So in this case, I start with my ABC Limited. Yes. So we have details. So I have ABC Limited. Then I have the percentage. Can call it percentage. Ama niite tu na jina, kuna shida. Percentage. Then I have my company XYZ Limited, then percentage. For the change. So you can put it in column form. To make your work look better. a neat column form and to guide you on how to move around. We have to move. So we have now to move direct. 400. I can first of all copy. I have revenue here, and sharings are in million. That is something that you should never forget. Sharings are in million. Sharings are in million. Once you do that, you can now start with your revenue. Revenues, of course, for both company. We have 4,000. We have 6,000. Cost of sale. How much is the cost of sale? How much is our cost of sale? How much is our cost of sale? How much is our cost of sale? Then you can get gross profit as usual. Gross profit. Gross profit is given by sale minus or revenue minus. That is our gross profit. From there, we can raise our expenses. Expenses. Let's first of all have it. So when others are looking at the sky or at the ceiling, for you, you'll be having something to write because you know that this is something very easy. Distribution cost for both company. This company has 200. This company has 200 and this one has 150. 150. Admin expense or cost. Admin expense. Admin is 290 for company ABC and the 250. Then we have finance cost. Just copy what I'm copying. Finance cost. For the finance cost, we have 10 here. We have 10 and then 400. This cost was very high. This cost, you'll find that this cost will affect this company. This cost and also this cost. You see, this company cost. You can tell even the performance. Even if the revenue was high, and you can see the cost, although still this cost is just above. This is above this with 200, but still affect the company. Then you get profit before tax. When you less the expenses, you get profit before tax, PBT. Profit before tax will be 500 for this. And the other one is 400. You can see profit has started to reduce. Now tujatoa tax. Unless sasa tax ikuwe mingi on the other side. And then tax paid 120. Tax paid. Still wameanza ku overlap 120. And put it in bracket if you wish, but just know that expenses will be less. And then on this side, we have 90. So with that, this 90, don't confuse this. We can get profit after tax part. For profit after tax, for this one will be 380. And the other one will be 310. So you can see they're overtaking, but still they're almost there. Then we have dividend paid. They also paid dividend. Dividend paid. The first company paid dividend of 150. 150. And then the other one paid 100. So you can see overtaking. Now dividend is consuming much here. So this one remain to have to 30 retained profit for the year. Retained profit for the year. This can be for the year. Profit for the year. For you, just write the full of it. 230. I will not write down. Yeah. Then we have 210. 210. First of all, are we together up to that point? Are we together up to that point? Are we together up to that point? As we complete this, we have to add retained profit brought forward. Retained profit brought forward. So when others are looking in the sky, outside the exam room, for you, you have something to do. You have something to do. You have something to do. So we have details here. Of course, details. ABC Limited. Then we have percentage. Use this percentage. Then XYZ Limited. Z Limited. Then percentage. Percentage. Hakuna kitu ngumu hapa. Kuna sasa wapi sasa? Ngumu wapi sasa? Ngumu wapi? So that is it. That is it. That is it. So we add retained profit brought forward. Add retained profit brought forward. So now the retained profit brought forward for ABC was 220. We are adding back 220. Then the other one was 2480. Hapo sasa ndio profit ya XYZ imeenda juu. See, ilikuwa chini but it is boosted from the previous year. It is boosted from the previous year. Then we have retained profit carried forward. Retained profit carried down. Carried down. Now this one we shall be having. This is 450. 450. Of course, you can close that. There's a funga here. Then the other one, hii ingine tuko na ngapi? Tuko na ngapi hapa class? Tunaongeza hiyo. Mepewa 2690. 690. Great. 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 Now, having done that, up to that point, you don't have any mark. Okay. You can be having a mark of maybe alleging because you have shown the examiner that you know that whatever that will come here is percentage. Lakini sasa, you need to put the percentages. Percentages. So, what is our percentage for revenue for ABC Limited? Very fast, very fast, very fast, very fast. I told you that you pick revenue as the base always. So it will be 4,000 divided by 4,000. You multiply by 100. Itakuwa 100%. So can you do the same for each item? The base should always be this. For this one, itakuwa 6,000 divided by 6,000. So the revenue is always 100%. Under this, got 100%. So let's move on for cost of sale. Cost of sale percentage ngapi? Cha tuziseme haraka haraka, we finish up so that we move to something else. We move to something else. Cost of sale, cost of sale, cost of sale. Nipe cost of sale. Tuziweke tu haraka haraka. This is a matter of engaging your calculator. Matter of engaging your calculator. Cost of sale, how much? Cost of sale, cost of sale. Cost of sale ngapi? Cost of sale 75%. I hope that is for this one. So I just put this one, 75%. In fact, The percentages are here, but let me just name them percent. No problem. Haya, next one, the cost of sale, either tunaweza enda hivi ama tumalize hii kwanza. Tumalize ABC Limited kwanza. Let's first of all finish ABC Limited. Let's finish ABC Limited as Thomas has started. So let's move to the next one, gross profit. Gross profit. Of course, if this is 100% and this is 75 as cost, gross profit I expect it to be the remaining percentage, 25%, because the gross profit plus the cost should add up to the, yes, 25%. Let's move to distribution cost. Distribution cost hapa. Nipewe tu hizo haraka haraka. It will be good. It will be good so that we move. Distribution cost ni ngapi? I wish kila mtu achukue tu yake. Zote tunazitafutia, zote, including the profit. 5%. So 5%. 5%. We move to admin. Admin itakuwa maybe juu kidogo ya hii. Around 6. Yes, thank you. Admin, let's go together. Admin, 7.25%. Then this one is finance cost. Finance cost, hapa at least walijaribu sana, hawakuomba rule kubwa sana. Ilipa tu 10 million. Lakini 10 million ni, that means they had borrowed a lot. 10 million as interest. That is very high. 0.25. So 0.25%. So it did not even get to 1%. So let's go to profit. Profit before tax. Itakuwa ngapi sasa hapa? Remember zote, unaweka zote. Profit before tax ni ngapi? We are doing great. Profit before tax ni ngapi? Before tax 12.5. So hii hata wenye walifanya hii mtihani mtu tu ndiye alitaka kuanguka. Let's go to tax. Let's see the percentage of tax paid. The tax paid, walilipa tax what percentage gapi? Thank you. We are doing great. 3%. Tax of 3% sio mbaya. In Kenya we pay 30%. That is very harsh. You see now we can see the tax rate that was paid. You see, analyzing become easier. So tax, what was the profit after tax? 9.5%. 9.5%. Then we go to dividend paid. How much? What was the percentage of dividend that they paid? The percentage of dividend paid. Percentage of dividend paid ni ngapi? 3.75. That is not bad. That means they retained the remaining 8.25%. No, 92. 92.25. I think. No, 97.25. Really, yeah. Let's move to retained profit. Retained profit ilikuwa ngapi? Percentage ngapi? 230. 230 over 4,000 times 100. Get that. Then we go to our profit. 5.75. 5.75%. Then 220, of course, itakuwa around there. Maybe at 4.9 ama ngapi? 220. Itakuwa juu ama chini? Itakuwa juu kidogo. 5.5%. Then we have the other one, retained profit carried down. Ni ngapi? 11.25. So the profit at the end, was at that rate. It is 11.25. This is the narration class. This is the narration of each. We are referring all of them to revenue as a percentage of revenue. So the revenue input that they had, or the revenue that they got, 11.25% is what remained, is the profit that they had at the end. Let's move to this one. What is the percentage of cost of sale? What is the percentage of cost of sale? Yeah, company XYZ inakuwa ngapi sasa? 80%. 80%, that's great. That speed is okay. We are training well. Each person, that speed is okay. And you can measure your speed using your colleagues, by the way. You can measure your speed using your colleagues. Good speed is always seen. Next one. The next one ingapi tuko sasa hapa kwa gross profit. Of course it will be 20%. Hiyo hata sifikiri, because I know that the gross profit and the cost must add up to total. Yes, 20%. Then we go to this is distribution cost. Distribution cost in ingapi 2.5%. 0.5%. Then the other one itakuwa 250 divided by 6,000 multiplied by 100. How much are we going to get? 4.17. For me, I'm telling you that speed matters in exam. Speed. Na utaniambia. Next one for 400 divided by 6,000. The base figure is always this. And hii ni rahisi sana. 6.67. Yeah, 2 decimal place is okay. 67. 2 decimal place is okay. Even in exam. 2 decimal place hapa kwa percentage. Yeah? Lakini pale kwa PV to get the discounting factor, 4 decimal places. 4 decimal places. So hapa tumemaliza, twende hapa. So this is same. Hii inakuwa tu same. Huh? Hey, hii ni same, eh? Okay. What about this one? 90. 90. Disregard negative, half your percentage, because we want to analyze this. We are analyzing this. Ingapi hii sasa? 90 divided by this one multiplied by 100. 1.5. 1.5%. We move on. 310. 310. 310 inakuwa ngapi? 310 inakuwa ngapi? 310 inakuwa ngapi? 5.17. Next one. Next one inakuwa 100 is a percentage. Next one 1.67%. Then to 10, 210, 210, 210, 110, 110, 110, 3.5. Then we move to 2480. Now hapo ndio hii kampuni iligonga hii ingine 10 nil, 10 nil. 2410 now divide by this. You see the percentage yake ita increase. Itakuwa juu sana. 41, you can see. Cannot compare. 41.33. Then we move to the next one, the last one. The last one inakuwa ngapi? Ya mwisho ni ngapi? Ya mwisho ni ngapi? Around 44, eh? 44. So hata ukiulizwa which company performed well? Which company performed well? This year of 2018, because they are comparing the company, yes, in the same industry, in the same line, maybe they are selling the same product, So they are trying to compare the performance. So which company performed well during the year of 2018? Comparing the two, the XYZ and ABC. Of course, company XYZ performed well compared to company ABC. Depending with the profit generated at the end. So, what can you advise? The management? What can you advise the management of ABC Limited? The first thing, the management of ABC Limited, when we compare their distribution cost with the management of XY Limited, you see, this distribution cost is far much higher. Of course, twice the distribution cost of XY Limited. XYZ Limited. Therefore, they have to check what is making their distribution cost to be very high, which is affecting their sales, which is affecting their profit, Let's look at their dividend. They paid a lot of dividend compared to these people under XYZ Limited. This dividend also reduced their profit. This dividend also reduced their profit. So they should see a way of maybe the payment of their dividend to make sure that they don't pay much to reduce their profit. What else? Retained profit. Let's also see. Hapa. You see, for the finance cost, this one had higher. They had borrowed higher loan, of which they paid very high interest. Very high interest. So comparing that, you can see the cost of sale of these people was very high. The cost of sale of this company XYZ was high with 5% compared to the cost of sale of our ABC Limited. So class, that is the way you analyze. That is the way you analyze the income statement. That is the way you analyze the income statement. So you can derive information. You can derive information from the percentages, because it is showing you now the reality of what is happening. Sometimes it becomes hard for you to compare numbers, but for the percentages, you are able to compare clearly. So class, are we together up to that point in regard to Roman number one? Who could have gotten that question, Roman number one, full of it, having done it in the financial reporting, Who could have gotten the whole of that Roman 1? Who could have gotten the whole of that Roman number 1? Ukiipata kwa hapa na hatungekuwa na tulikuwa tumefanya kwa nini? If we had not done it in the financial management, but we had done it in the financial reporting, si sasa ungefikiria it's a different thing? No, it's not a different thing. We are still in financial reporting doing the same. So for those who did not, for those who got us maybe ahead and we had tackled this topic under financial reporting, now you can see the recap. It's the same, analyzing financial statement. So this is the way you treat it even in that. What now differ is now the decision you are making from this. The decision you're making from this. The decision you're making. Here you give the decision. For the financial reporting, you are reporting. So are we together up to that point? Because I want you to do the remaining part, the other part. I just give you the hint and then you proceed. And I will give you a maximum of 10 minutes. Okay. All right. So class, that's all in regard to income statement. Now, when we come to Roman number two, this is ABC Limited, and XYZ Limited. Of course, it is vertical common size statement of financial position. Never forget to write the heading. Vertical common size statement. Statement of financial position. As at 30th September 2018. So still we need to see what it takes. So you need to come up to write whatever that you have, everything that you have. You have the column of detail, then you have the percentage, the detail, then the company, and then remember to put that you are dealing with millions, and then the tips down here, tips under statement of financial position. The base figure is total assets. Total assets for assets. And total liabilities. Total equity and liability. Remember to say equity here. Yani, the balancing figure of course. Seems the same. Yani, just use the total assets. See, total assets and total liability at the end zinatoshana. So the value, that value ndio utatumia throughout. The base figure. Base figure. Where is the word base? The base figure. So for instance, let me crack it a bit for you. For instance, for the I have a detail here. Details. I have detail ABC Limited. Percentage. So I have land and building. The value of that and building, of course, this is we are dealing with a million. Dealing in million. Land and building is 1,200. So what is our total assets? Total assets ni ngapi? Total asset ni ngapi? For the ABC, total asset ni ngapi? Is it that 150? That 150. So to get the percentage for this, I have to take 1,200 divide by 3150, then I multiply by 100. How much will I get as a percentage for that? Napata ngapi? Yani, it is that simple. Easy. Ni rahisi. Ni ngapi? For the land and building percentage. Percentage ya land and building ni ngapi? Ngapi? How much? Remember, we are dividing. The base figure is the total assets. The base figure under the financial statement of financial position is total assets. 38.1. 38. So you do the same for the rest. And we shall mark it randomly. For example, tunachukua ordinary share, tunauliza ordinary share ya ABC Limited umepata ngapi? That is the way we shall say whether we are getting the same thing. So can I give you 10 minutes to try that? Can I give you 10 minutes to try that? Can I give you 10 minutes to attempt that? Can I give you 10 minutes to attempt that? Can I give you 10 minutes to attempt that? Okay, it's exactly at 6:29. So by around 6:40, let's come back and see what we have. So, wacha tuchangamke. My recording. Great. Now, what have you gotten as the ordinary share? Ordinary share. I know that is an item under equity. Hapa ya A. Ya ABC na XYZ. Taziweka tu XYZ. Ordinary share umepata ngapi? Utanipea tu 2, 3. 31.75. 31.75. So 0.75%. Now, Chalambo. Exactly. Great. That is great. Let's go to audience share for XYZ. XYZ. And 20 point. This is good. 20.30. 20.30%. It's a percentage. Thank you so much. Let's compare something else like bank overdraft. Bank overdraft. Bank overdraft. Bank overdraft umepata ngapi? Bank overdraft. Kuna bank overdraft hapo. Bank overdraft hapo. Pata ngapi? Bank overdraft XYZ 0. XYZ 0. Kwa sababu haikuwa nayo, si ndio? What about the other one? 3.3. Is it 3.8 ama 3.8? ABC. Kwani bank overdraft ilikuwa 120, right? Ilikuwa 120. 3.81. That is what I'm getting. 3.81% and 0%. That is all. That is all that we can do. Thank you, Grace. Thank you, Blayo. Thank you. Thank you so much. So I think that is good. That is good. And kila mtu amefahamu vile tunafaa kufanya. So let's look at percentage of sales method. Percentage of sales method. Percentage of sales method. So to analyze that, to analyze your statement of financial position, to analyze it, you just look at what you have. You just look at what you have from both company, and then you indicate whether it was higher or lower. So let's look at something small here, percentage of sales method. Percentage of sales method. Percentage of sales method. Analyzing current data to determine the future values. It refers to analyze current data. Current data to determine the future value. To determine the future values. Great. So under this method, the balance sheet item, the balance sheet items are considered to vary. Are considered to vary directly with the level of sales. To vary directly with the level of sales. Sasa hapa, hii ni muhimu. Hiyo ni muhimu. Using the current relationship between sales using the current relationship between sales using the current relationship between sales and balance sheet item items, the future financial need can be forecasted. The future financial need can be forecasted. Can be forecasted. So we have some assumptions. So I just have them, assumptions. We go with the assumptions of percentage of sales method. Of sales method. We have assumptions of percentage of sales method. Sorry. There is a direct and constant relationship. One, there is a direct and constant relationship. Examiner anaweza kuuliza relationship. Examiner anaweza kuuliza hizi between sales and various balance sheet items. Between sales, hii ni testable, and various balance sheet items. Balance sheet items. Items. Number two, is it really visible? We check. Yeah, it is. It is. The existing relationship, the existing relationship between sales and balance sheet, 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 the existing relationship between sales and balance sheet items shall be maintained in future. Items shall be maintained in future. Shall be maintained in future. That's very good. Then we say the firm is currently operating at full capacity. The firm is currently operating at full capacity. At full capacity. At full capacity. The firm is currently operating at full capacity. Gross profit margin is our next assumption. Gross profit margin. Gross profit margin is known in advance. Is known in advance. So when we shall be doing an illustration, these are the assumptions that we shall be using. It's known in advance and with certainty. With certainty. Hii inajulikana kabisa without with no doubt. With no doubt. So the gross profit margin is known in advance and with certainty. No doubt. Beyond any reasonable doubt. I declare no doubt, very certain, very certain that the gross profit margin will be this. Gross profit margin, dividend payout ratio, that is number 5. Dividend payout ratio. Dividend payout ratio is known in advance and with certainty. Is known in advance. It is known in advance and with certainty. 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 Hakuna doubt. 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 Let's see some of the weaknesses. Weaknesses for the time. That's good. 5 minutes to malize. Tunamaliza or in the next 5 minutes. So weaknesses. Weaknesses. Weaknesses of this percentage of sale method. It assumes that gross profit margin can be predetermined. Tunapendua tu hizi. It assumes that gross profit margin can be predetermined. That is one. Two, the company operates at a full capacity. The company operates at a full capacity. Great. Number three, the dividends payout ratio. You see, when you are asked of weaknesses, you take those assumptions. Unaziframe, eh? The dividend payout ratio. The dividend payout ratio is known in advance, and with certainty. Great. Number four, you can say that the existing relationship. Sasa hizi points mzishike during the weekend, so that when we shall be tackling the question, inakuwa rahisi. Between the existing relationship between sales and the balance sheet items, sasa shall be maintained in future. Shall be maintained in future. Okay. Ingekuwa mbaya kama singe elaborate hapa hivi that when you are asked to give the weaknesses of the percentage of sales method, these points, assumption, ndizo zinatumika. No. The assumptions, ndizo unatumia. Unazireframe. So class, that is marking the end of our today's session. Let's continue looking at the theory part. During the weekend, I think I'll as well I want to send, there is a very small note on Islamic finance, because so far I know there are some people who are through with the topic 1 and 2. I sent the Islamic finance. Yes, Islamic finance during the weekend. Make sure that you create time to go through those theory parts and make sure that you revise. So, note. Sawa techno. So that's all that we can do today. Wacha tuendelee kusoma. Ndio sasa we are at date 2 of February, so we need to